In a recent Central Bank of Nigeria report, foreign exchange inflow reportedly increased to $7.17 billion compared to $6.21 billion in the previous quarter. While we're seeing an increase from one quarter to the next, there are still concerns about just how much the largest economy in Africa is making, how much it is spending, and on what. Q1 2023 saw a total of $17.18 billion come into the economy, representing an increase of 7.5% compared to $14.62 billion in the preceding quarter. But the federal government's fiscal operations resulted in a deficit of 1.43 trillion naira in the quarter under review. Kalu Aja, financial analyst and a certified financial educator, joins me now to look at what kind of problem Nigeria really does have and if we can address it. Kalu, welcome to Business Edge. Thank you so much for joining me.
Hi, how you doing? Good morning. Thanks for having me.
So let's start with this CBN report. It's in black and white, which shows that foreign exchange inflow did in fact increase to $7.17 billion in Q1 compared to $6.21 billion the preceding quarter. And then, of course, a total of $17.18 billion was attracted into the Nigerian economy. So it seems to be positive news. So let's start with that. What were some of the major contributors to this increase that we saw?
Well, we want to think it's the policy, i.e. the float policy that's attracted the funds in, and we may be right. The problem with the figures you quote is when you compare it to what's happening in the non-CBN remittances, the P2P market, you see it still pales. There's a lot of flows going to the non-CBN side of the foreign influence in Nigeria. So the problem really is not that flow, it's what is happening outside the CBN, because that's what's going on. There's dollars coming in, but it's not coming in via the CBN. Hence, you have that disparity in rates, the CBN rate, quote unquote, that NAPEX rate, and the black market rate. That's really what's going on. And that's why I think they removed the 44 items, sort of equalize the markets to make it no capital controls whatsoever and compete directly with the P2P market. Yeah.
So it's interesting you mentioned those 43 items. Let's quickly look at that. So we already have an FX situation. And when the Central Bank of Nigeria Governor, Dr. Yemi Cardoso, was doing his confirmation in front of the Senate, he put the figure of backlog at about $10 million. Now, when you remove these items and add the importers of these items to the existing backlog, doesn't it seem like you're creating a bigger problem? So I think the question really is, would we have left those items until the backlog was somehow cleared, or are we really ready for the sort of situation we're creating here?
I think the issue is to create a market. The CBN government wants to go back to what's called elegant central bank management, right? If you have a CBN market or any market where you exclude certain items, you're essentially saying go somewhere else. And Nigerians have gone somewhere else and attracted flows to that other place. So if I want to import rice, I can go to a Nigerian bank, which means I don't buy dollars in Nigerian bank because I don't use Nigerian bank to import rice. So I guess the CBN looking at same equal market, willing buyer, willing seller, where you can then go to and get the float, or should we say the volume in that market without restrictions. So it's going to be the consumer determining if those goods are expensive, if they can afford the imported goods or not. So it doesn't trigger inflows, but it removes an impediment of competition between the banks and the P2P market. That's really what it is. It's a good move because you don't want to have a handicap market and a market that has no restrictions and in the same space, more or less.
Okay, so let's come back to the data from that Central Bank of Nigeria report. And it says that the figures that we saw, or that I mentioned earlier, represent an increase of 7.5% compared to some $14.62 billion in the preceding quarter. But when we look at the size of Nigeria's economy, the largest economy on the African continent, most populous black nation on earth, a very youthful economy, that growth margin, some might say, okay, it's encouraging. But when we look at the actual figure and put that against the data we have for Nigeria's economy, is it truly an encouraging number, considering the external and domestic shocks that the economy is experiencing?
No, it's not. That's the answer. It's not. The key revenue generator for Nigeria, forex revenue generator for Nigeria, is crude oil. And that's down because of the oil theft in the Niger Delta. It's down. The second is going to be remittances. And remittances have sort of gone down or have moved away from the CBN to the P2P market. These two guys, we've seen, there's no traction or no growth in these two key sectors, the oil and the remittances. So it's not enough to grow Nigeria, especially when you consider that the bulk of the oil sales are now going to fuel subsidies. So there's really no leeway, no allowance, no increase in the CBN foreign reserves to then tackle inflation and also defend the naira. It's pay for imports and defend the naira. Hence, they have to float. The quick answer is it's not enough. We need to do times 25 what we're doing. We have to keep pace with population growth and, of course, import growth. Remember, the cost of production in Nigeria is now more expensive because of inflation. So what normally would have produced locally, here the SMEs, we import. And if we're importing more, we need more foreign reserves. And foreign reserves are dropping because oil sales or oil lifting from the Niger Delta is down, and remittances have not gone back up because it's going to somewhere else, not the CBN. It's not a pretty picture. If you look at the whole picture, it's not pretty at all, and it just shows lack of forex coming to the official sources in Nigeria.
Okay, so we know that the big elephant in the room is spending. There are those who believe it's a revenue problem that Nigeria has, those who believe that it's a spending problem. But what we've seen is that successive administration after administration, budgets after budgets, we are in a deficit. We are exceeding revenues with our spending. Now, fiscal operations for the Nigerian government have resulted in a deficit of 1.43 trillion in the quarter under review. So I put it to you, do you think it's a revenue problem we have or a spending problem?
I think when we say it's a spending problem, we're trying to draw attention to the wasteful spending because the revenues, we know what's going on with the revenues, oil, remittances, right? But the spending is the problem. We are spending on Nigeria, and those are choices. Those are choices. We chose to subsidize PMS. We also chose to take debt. We chose to print 23 trillion. 23 trillion is showing up in the balance sheet now, almost 1.6 trillion for 7 months. Interest servicing to pay the Central Bank of Nigeria, 1.6 trillion. That's a choice we made to print 23 trillion. We took a choice to also subsidize PMS imports. So the spending problem is addressing the fact that we are taking wrong management choices. There's nothing wrong with the subsidy if you can afford it. Clearly, Nigeria can't afford the subsidy because you've spoken about revenue sources falling. If oil prices were up and output was up, then Nigeria can afford the subsidy. Right now, we can't afford it. And sadly, we've gone back to funding that PMS subsidy. So it's a spending problem because we're taking executive decisions to spend in sectors where we do not have any business doing and we cannot afford. So we're taking debt to consume, and we're entering this debt trap, which we're going to have a problem coming out from.
So we'll talk about debts in just a minute, but I want to stick on this revenue and the spending. So when we look at the numbers again, I like numbers. We realize that the net earnings from crude oil and gas in the same period under review is about 486 billion naira. And for solid minerals, about 1.99 billion naira, which we know we could be doing much better. But personnel cost amounts to 978 billion. That's just really under 1 trillion naira. So this means that everything we're making, crude oil sales, including gas royalties, plus foreign exchange gains, they can't pay the salaries of federal workers. But then do we look at revenue from other non-oil sectors? Should we be looking at tax? We know that there's a huge move right now for the reformation of Nigeria's tax sector, ICT as well. Should we look elsewhere to fill this gap? Or is this really one of the best cases for Nigeria cutting the cost of governance, which does include the issue around paying salaries?
So I have my high-tech board here, right? This is basically where you get money from. Exports, FDIs, remittance, and all that. So exports is very, 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 very low in Nigeria, i.e. non-oil exports. We have to get this up. FPI, Nigerian people buying Nigerian bonds, also very, very low. Capital importation, very, very low. Basically, remittances and all that. This is where we get our forex from and where we potentially could get revenues from. The issue is simply this. Tax revenues to GDP in Nigeria, very, very low. The size of the economy is not growing, right? But the costs are growing and are fixed. Like what you just said, personnel cost for 7 months is nearly 2 trillion. Oil sales is only 800 billion. The interest we pay to the CBN alone for borrowing 23 trillion from the CBN is more than the total oil sales Nigeria has made in 7 months. So it doesn't add up the balance sheet. If Nigeria was a country, makes no sense. No bank would lend to a country if Nigeria was a company. No one will lend to us. The balance sheet is off, and we've got to go back to increasing revenues, perhaps. And we do this not by increasing taxes, but by maybe broadening the base. Actually reduce the taxes, but broaden the base of who pays the taxes, make it easier for people to pay taxes and bring in more activities into the tax base. I think we're taxing only a few people, a few organizations, but we have to bring in more, reduce the tax numbers, but increase the broad base, and then how we can then get more in CIT, corporate income tax, and VAT. But for now, what we're doing isn't going to work. Long term, Nigeria cannot survive as a going concern if we are paying so much in debt. Now we are borrowing to pay back debt that we already borrowed. We can't survive like that.
So now it's the debt time, Kalu, and I know this is not a very pretty part of the conversation for many of us watching things play out. So public sector external debt stock and external debt service payments stood at $41.69 billion and $0.80 billion respectively at the end of December 2022. Now, just last week, we heard that the Tinubu administration is seeking a $1.5 billion loan from the World Bank. And news today that I read in the headline says that Nigeria's total public debt is forecast to hit 118.37 trillion naira in the next 3 years, with the federal government planning to take 26.42 trillion naira in loans between 2024 and 2026. Debt servicing is expected to take 29.92 trillion in the next 3 years. So we also know last year we saw debt servicing overtake Nigeria's revenue coming in. At the end of the day, we obviously see a debt problem. But some in government will tell you it's not a debt problem, it's a revenue generation problem. Whatever the pretty picture is, the numbers don't really lie at this point in time. What should we be looking at? What picture does this paint for us of Nigeria's economy and its sustainability, even the fiscal space that the Tinubu administration has to play with?
Yeah, it's a debt trap, clearly. And once a debt trap, your interest payments can no longer cover, you can't really cover your interest payments, right? So the point is not the amount of the debt, but the cost of the debt. The Euro bonds, which are about 30-40%, that total number you have quoted, is very expensive. We are paying for 35 years about 8.5 APR to investors in dollar terms. Now the Naira has been depreciated, which means the same dollar we were paying 2 years ago at say 400, we're now going to pay 1,100 to the same investors for the same debt. So more revenue will come from Nigeria in terms of Naira tax, Naira revenues to pay dollar debt. You see the problem already. We're paying debt in dollars, but we earn in Naira. So the Euro bond is the main problem because it's in a dollar and we cannot print it. The local debt is huge because we really just can't wrap our fingers around that. But even at that, the bulk of it, even a new bond that we're paying the CBN, is convertible and is maybe put over 40 years now. So we have a bit of a leeway. But what are the red flags? We're going to start to pay back the principal of the Euro bonds. I believe it's going to be this year or next year, the principal of the Euro bonds. And red light flashing, we have a legal case that's going to be adjudicated today. We might be on the hook for nearly 10 billion.
Yeah, PNID. Billion.
I'm not sure we'll plug that in. But the summary is this, right? The dollar debt is what's killing us because it's material and it's large. And we don't earn dollars anymore to pay because bulk of the dollars are going to fuel subsidy. So it's a problem. Where do we then get the dollars to pay back the debt? If you want to increase revenues like my high-tech board shows, we've got to do export. We've got to bring in remittances. We've got to do FPI. And on all three, we're not doing as well as we should. So we have to go back really and think this through and say, where can we get dollars in? That's really it. We have to get dollars in big time. It's not a big problem for us there.
And so in the area of getting dollars in, I'm going to combine two questions. We heard from the IMF that emerging countries like Nigeria should come and talk about restructuring their debt. So Kalu, is it time now for Nigeria to take the debt restructuring conversation seriously? That's part one. But then when you also talk about FDIs, we've seen with the markets, non-residents' claims on the economy reduced significantly as investors also redeemed mature investments as capital reversal of 0.78 billion was recorded in Q1 compared to an inflow of $1.94 billion in Q4. What picture is that painting for us when it comes to investments, foreign investments particularly, into the economy? So two questions there for you.
Yeah, so if a guy on Bloomberg wants to buy Nigerian bonds, he's worried about the issuer and repayments. When he looks at our macroeconomic indices, he sees that we cannot pay back dollar obligations. That's where the IMF comes in. The IMF can give you a short-term loan in dollars that you can restructure a balance sheet in the short term, buy yourself time. That's basically what I hear them talking about. Get some dollars in, allow us to clear the forwards, about 6 or 8 billion forward that we have outstanding, clear that away whilst the reform that is implemented take time to kick in so that going forward, the revenues from crude oil, from non-taxes, then pay the debt. That's the plan I'm hearing. So it might be necessary, not because we want to, but because it's necessary to take a short-term debt loan in our current accounts just to hold us over for the short term whilst the reforms kick in. So your second question about the inflow, again, if you want to invest, you want your money back, your principal and your interest back. If you look at where we make our forex from, non-oil is non-existent. We just talked about solid minerals. It's 1.2 billion, $2 billion revenues for the whole of solid minerals in 7 months. That's nothing. We can do much, much more than that. We export gold, we have lithium, we have a lot that we can export. Same with agriculture, right? We can do a lot more in exporting cassava, that's ethanol that China wants. So we've got to go back now and we'll have to ask the questions. Look at states and say, who is still doing IGR? Let's rank states by exports. We don't really care about your IGR, but which states are the export earners in Nigeria? Which states are bringing in IGR? Which are bringing in, FDIs and FPIs to Nigeria? That's got to be the focus for everyone in government today. If I have a policy, will it bring in dollars? How can I bring in foreign capital importation into Nigeria? Because in the long run, we're all there. That's Keynes. So in the short term, we've got to pay our bills to allow these reforms that I see them doing take hold. That's how we have to play this game.
All right, so we've seen the first Tinubu budget that was announced just last week, and they're proposing to spend about 26.01 trillion naira. Now, that's an increase of 19.15% from the 21.83 trillion that was approved for 2023, the last budget for the Muhammadu Buhari administration. But what we know now is that we're also expecting about 1.18 million barrels per day. Then we're also seeing a peg for the barrels per day of again around $73, $74 as well. Also seeing a peg for the dollar. How realistic are these projections? We don't have much more detail about what else is in the budget down to the line items, but what we know so far is important. The total figure, the barrels per day projection, and of course where they expect to see the dollar pegged as well. What do you think about what we know so far?
Dollar peg, I agree with them. I mean, dollar today is about, the oil price is about 98, 99 because of the shocks, because of the reduction in supply from Saudi Arabia and Russia. So that's not the real price. The real price should be lower. So for them to take 75, they are being prudent. That might be possible. I agree with them on that. Just being prudent. China is also weak, so not a lot of oil sales next year. The part I might not agree with them is the assumption on production. So since 2018, we haven't gotten to 2 million barrels. Before 2015, Nigeria was doing about 2.3, 2.2 million barrels a day. The problem is the output. We're not producing anything. Right now, we're down to about 1.3, 1.4, right? So if you want to go back to 1.7, you're simply saying you want to go back to where you were before this whole breakage of the pipe started. So there's no ambition there, right? There's no ambition to say you want to do 2 million barrels crude oil a day. The only thing that gets us out of this hole is the export of crude oil. Let's not kid ourselves about agriculture. That takes time, and we don't have the time to plant soybeans, to harvest it, and then export to China. Right now, we have to export more crude oil to get in more dollars to pay our maturing obligations, €1 billion Eurobonds. So oil sales has got to be the number one priority for this government. And these are static pipelines. You know exactly where they are. Why can't they be protected so they can pump at least 2 million barrels or more in the calendar year 2020, 2024. That's really where I think they dropped the ball. It's a low projection. It doesn't show a lot of ambition in terms of the output you like to throw out there. So that's just my take. Also, the budget reads like it's the same budgets. It's just they change the figures. We're going to spend this. We're going to borrow this. It's the same thing. In the whole agenda I read during the manifesto, we're talking about uncoupling the benchmark from the oil price. We're talking about doing massive spending. I'm not seeing it in this budget. This looks like the same old budget. I assume there's going to be a brand new Eisenhower type or Roosevelt type spending where we're going to print a lot, employ people, and hope that they stimulate the economy by spending. I didn't see it in this budget. This is like a normalist budget, but let's see what finally comes out. These are the assumptions. Let's see the actual budget that we can
and I know
that notification. Yeah.
And I know we'll have you back when we have that. But one final question, I just need an answer in just about 45 seconds. So we know things are tight around the world right now. Tight global financial conditions also causing uncertainty in Nigeria's macro economy. We've seen what the U.S. yields are doing. The U.S. dollar is strong when everybody else is taking a beating, and that's making it worse for all of us. In terms of policies that can help maintain stability and even build resilience against these global economic shocks, where do you think the Tinubu administration should look first? You've talked about raising oil production because it's the easiest, surest way for us to raise revenue right now. But beyond that, policy conversation, very quickly.
I mean, number one, look at your diaspora. That's a big advantage. You have them already there. They already send money in, 25 billion minimum. Go to them, increase to 50 billion. That can be done in 3 months. It's your policy. It's your optics. They have to see that you are doing the right thing, that they can send more money back. Not welfare, but now FPI. So go after your diaspora, right? Cut down the spending and change the optics. Let Nigerians believe you are also suffering, quote, then they can join you in suffering and also working with you. So it's policy, optics, and expectation. You've got to give Nigerians optimism that things are going to get better tomorrow. It's an economic term. When Nigerians feel optimistic, they can spend. The problem is lack of spending. So policy, optics, and expectation. Those 3 things, focus on them. Go after your diaspora, bring in 50 billion, and then let's start from there.
And then we build the blocks. Kalu Aja, thank you so much for joining me, financial analyst and a certified financial educator. I know that we'll be having you back as we see more details into the budget as well and what the actual numbers and breakdown look like. Thank you so much for your time today.
Very welcome. Thank you so much.
Fantastic.